I was at meeting with financial advisors this week in South Florida. Yeah, exactly. They are still very interested in Bitcoin. Many of them see this as an entry point, a new time to get in. People who bought it previously are going to continue to hold. So ETFs are going to eventually exhaust the supply of Bitcoin the same way gold eventually exhausted the supply. It just takes a while. So look, when I look at the gold move, I say the store of value market is bigger than it's ever been, and Bitcoin is eventually going to win a huge share of that. I think that's still intact. I don't think people should give up the faith.
At the core of Matt Hougan's thesis is a simple but powerful idea. Bitcoin is digital gold, not a speculative tech stock, and not merely a high beta risk asset, but a new form of monetary asset engineered for a world that is steadily losing confidence in traditional institutions and moving toward a multi-currency global order. Hougan emphasizes the importance of evaluating Bitcoin over proper timeframes. Over the last decade, the US dollar has declined roughly 26% in purchasing power, while Bitcoin has appreciated by orders of magnitude, approximately 20,000%. Since the COVID lows alone, Bitcoin has risen roughly 20x from its bottom. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
So my core thesis on Bitcoin is digital gold. I think it's better than gold because it extends self-custody through settlement. I think gold is good as a store of wealth, but as we move into a multi-currency world, the ability to use it to settle transactions is really challenged by its physical girth. And Bitcoin solves that problem. When I look at it, I actually think it's been doing a good job as digital gold if you look at it over the right time horizon, right? Over the last 10 years, the dollar is down 26% and Bitcoin's up 20,000%. That's pretty good. If you look since the COVID low, even today, Bitcoin is up 20x from where we bottomed at the start of COVID when inflation really hit. It's on these shorter term periods, but gold itself, if you've been studying gold for 10 or 20 years, goes through long periods where it doesn't do a perfect job storing value. You have to look over long periods of time. So I think the Bitcoin thesis is still intact. The technology still works. It's still the only digital asset you can self-custody through settlement. And that is a very powerful thing in a world that's losing faith in institutions. I still think that's intact. So the thing about the gold rally is I actually don't think it was a debasement rally. What I think happened was that in 2022, the US seized Russia's treasury assets and central bank purchases of gold went up 150%. So actually they had been buying about 400 tons of gold a year. And in 2022, they bought 1,000 tons. And then in 2023, they bought another 1,000 tons. In 2024, they bought another 1,000 tons. In 2025, they bought another 1,000 tons. So it did a one-time uptick because central banks learned that if you held US Treasury assets, they could seize it if they wanted to, and they didn't like that. That obviously doesn't apply to Bitcoin because central banks don't hold Bitcoin by and large. It's not yet big enough, but that's what drove gold. The interesting thing about that, Miles, is that the price of gold didn't go up in 2022. So central bank purchases went up, but the price of gold went up like a couple percent. And then the price of gold went up like 11%-ish in 2023. And it did a little bit better in 2024. But yeah, you're highlighting it. The central bank purchases increased, but it took 4 years for it to work through excess supply. So for those first 4 years, people were willing to sell into the market and central banks kept buying. They were willing to sell into the market. What happened in 2025 is that people ran out of gold to sell. And so as central bank buying persisted and the available supply sort of exhausted itself, the price has nowhere to go but parabolic. I actually think long-term, the same thing is happening in Bitcoin. If you look at ETFs on a 1 year basis, I know there've been outflows over the last few months, but in 2024, ETFs bought something like 2x the supply of Bitcoin. In 2025, ETFs bought another $20 billion of Bitcoin. That was more than the available supply. That chart is going up quickly. And from my conversations with institutions, it's going to go up again. I was at a meeting with financial advisors this week in South Florida. Yeah, exactly. They are still very interested in Bitcoin. Many of them see this as an entry point, a new time to get in. People who bought it previously are going to continue to hold. So ETFs are going to eventually exhaust the supply of Bitcoin the same way gold eventually exhausted the supply. It just takes a while. So look, when I look at the gold move, I say the store of value market is bigger than it's ever been, and Bitcoin is eventually going to win a huge share of that. I think that's still intact. I don't think people should give up the faith. The challenge for the market right now is that the positive stories are very slow. So the next cohort is still financial advisors. It's wirehouses like Morgan Stanley, it's family offices, it's insurance companies, and it's sovereign nations. I'll give you two facts that to explain why it's still that story, why we haven't even really seen the impact. This is the market that we serve at Bitwise. This is how we've gone from nothing to $15 billion of serving this market. Our average client allocates with us after 8 meetings. In other words, either me or one of our 25 salespeople or our research team has to go meet with these clients 8 times on average before they allocate. In general, we don't meet with people more than once a quarter. So 8 times is 2 years. That's how long it takes for these traditional financial executives to get their heads around Bitcoin. I raise that because we haven't even really seen the flows, right? We've seen the initial flows into Bitcoin ETFs from people who were already familiar with it. But the people who are starting at zero, 95% of those people are still just now getting involved. And the way this market works is that on the first day of Bitcoin ETF launch, only a small fraction of the institutional market can buy it, maybe 10, 15%. If you're a financial advisor on a big platform like Morgan Stanley, they just approved it in Q4 of 2025. So their 8-meeting clock just started a few months ago. They're going to be allocating in 2027. And this, it's obviously different people come at different times. This is an average, not individual, but this is going to create a rolling wave of inflows. The other stat to just support what I'm saying, so you don't think I'm just sort of giving you hopium, is, I come from an ETF background. So before I was CIO of Bitwise, where I've been for 8 years, I was the CEO of ETF.com. I actually created the first ETF data and analytics business, the largest ETF conference, and I was in that market for 15 or 20 years. The closest analogy to this was the gold ETFs, which launched in 2004. And when the gold ETFs launched, the first year inflows was something like $3 billion. And it was the second biggest ETF launch of all time. And everyone was excited. But the second year inflows was $5 billion. And the third year inflows was 8. And then it was 10. And then it was 12. And then it was 18. It actually took 8 years to reach the first peak of inflows. And then it fell a little bit. And actually on the 18th year was the peak to date in terms of inflows. The TradFi market just moves extraordinarily strong. So I raised that by saying most of the world's capital is controlled by professional investors. Most of that money doesn't own Bitcoin yet. I think eventually it will, but that takes just an enormous amount of time, right? It takes an enormous number of meetings, an enormous amount of education. But make no mistake, from my channel checks, from our internal flows, it's still happening, and I think it'll happen for years to come.
In 2024, Bitcoin ETFs absorbed roughly twice the available annual supply of new Bitcoin issuance. In 2025, spot ETFs added another $20 billion worth of Bitcoin, again exceeding newly available supply. But like gold, price does not respond instantly. Markets need time to absorb inventory from sellers who accumulated during earlier cycles. Over time, persistent institutional demand gradually tightens available float. Hougan's thesis is that ETFs will eventually exhaust available supply in the same structural manner that central banks exhausted gold supply. It will not happen overnight. It will take years, but the directional pressure is clear.
I think it's a little bit of an issue. So it does get raised in my meetings, particularly with larger institutions. It is a reason for them to say no. sometimes they're just looking for a reason not to do it
Mm.
because they don't feel comfortable with it. And if they can point to something like quantum, then that is a reason to delay making that decision. I think it's keeping them out of the market. For what it's worth, I also think usually in these market pullbacks, one of the sources of support in Bitcoin is sort of the OG Bitcoin community. And I think when you have Willy Woo worrying about this, and when you have Castle Island worrying about this and Nick Carter worrying about this, part of that OG community is uncomfortable coming in until Bitcoin core devs make this a thing. I think tangible progress on quantum resistance would actually be one of the signals that could help us bottom. Now, do I think it's a pressing problem? I don't think it's a pressing problem. I still think it's many years out. Do I think Bitcoin can solve it? I think Bitcoin can solve it. We know what the problem is. There's some uncomfortable decisions we have to make with things like Satoshi's wallets, but it is a problem that we can identify and solve. But absolutely, is it coming up at the institutional level? Yes is the answer. I met with a central bank earlier this year. They raised the question of quantum, and telling them that we know it's a problem and that there are solutions in the future, they can say, great, but you still have to implement those solutions, right? And there's always risk in implementation. So I do think this is one of the things that could help us bottom and be a positive catalyst. It doesn't matter if I'm worried about quantum, right? It doesn't matter if I think the devs will solve it. It doesn't matter if like I'm feeling it matters what the community thinks. Because as you said, it keeps some of those OGs on the sideline. It skews the book. It removes a source of support, and it can spiral. And you can look at the relative returns of an asset we haven't talked about, and this is not the only reason it's been more resilient. But Bitcoin Cash versus Bitcoin, since they got on the quantum warpath, it's outperformed. I may not like that, but it's just objectively true. And I think the data in the market suggests what you're saying is true. This is keeping part of the OGs out of the market. It's probably encouraging them to sell. And it doesn't matter if that's a real concern or an immediate concern or not. It has to be solved to help with that relative narrative. I was looking the other day at monetary crypto assets. And if you plot since, let's say, the start of 2025, if you compare Bitcoin, Bitcoin Cash, Zcash, and Monero, I think it tells a pretty interesting story, which is that there's part of the OG crypto community that I think is worried about Bitcoin and quantum, that is worried about sort of suit coins like me dragging Bitcoin into the regulated market, and privacy coins, and maybe with Bitcoin Cash's sort of tilt to quantum resistance in the middle or part of last year. There's been a little bit of rotation there, right? I think it's an interesting side note. Again, I think Bitcoin wins in the end. That's my core thesis, but the numbers suggest something interesting is going on. Hugely bullish on privacy. I do think one sort of picture you can have in your head is that as Larry Fink and other traditional investors drag Bitcoin into the regulated sphere, it creates a much bigger space for actual privacy coins on the other end of the sphere, where they won't participate in the same way in the institutional market. Like, I would be very challenged to bring a Monero project to market. It just wouldn't sit well with regulators. But that is a significant community. And I think, again, as we move crypto more mainstream, the space for that widens out. And I think, when I talk to that part of the community, they are excited about those markets.
Matt Hougan's core message is not one of short-term price prediction. It is a structural thesis built on monetary evolution, geopolitical shifts, and institutional behavior. Bitcoin, in his view, remains the only digital asset that enables self-custody with native settlement. That capability becomes increasingly valuable in a world where sovereign neutrality is questioned and institutional trust is eroding.